This is such a trying time. The numbers just seem to be getting worse. Is it really a scenario where we could see a massive 30-some% drop in U.S. economic growth?
Well, we've never been here before, so it's difficult to make these estimates. It's difficult to see how much of a standstill the economy is at and how long it's going to last. But I think what's the most important is not necessarily which number prints, and given these are going to be very scary numbers, especially since usually the US prints annualized GDP figures, so imagine what that will look like. But the reality is it's much more important about how long the economy stays at a standstill, how long economic data stays poor for, and what the recovery will look like. And increasingly, it's looking like this recovery is going to be slower, and we're not going to be able to ramp up the way we had hoped. And that's probably why these estimates are getting worse, because the amount of time the economy is going to be at a standstill is going to be much longer than we initially expected.
So then how exactly does anybody on Wall Street, any investment professional around the world, actually try to model or predict this? It's hard enough when data is available, but with so many unknowns out there, how exactly do you talk to clients about what the path forward is going to be if there are that many unknowns about a case like this?
When conversations with clients, it's a lot more about investment horizon and how they want to be positioned. So if you're thinking very short term, our view is it's too late to sell, but it's too early to add back. We think we'll probably retest the lows, and if we might not go through them, but we'll probably go back down a little bit further, especially because we, as you said, we don't know yet the full cost on growth and on earnings that we're going to see. So even valuation metrics are difficult to model because you just don't know how bad your earnings picture is going to be. So in the short term, we remain very cautious, and we're waiting to see the peak in cases. And that peak is not going to come at the same time everywhere. Italy looks like it's past the peak. We're hoping a couple other countries in Europe are going to follow. But in the US, it'll probably be more a case of state by state, given that confinement measures aren't generalized to the whole country. If you're looking beyond that, we're still constructive over the medium term that we are going to make it out of this, that we will pull through, that growth will recover. It might take a little slower or a little longer to ramp up than we'd hoped, but we will get back to growth. Everyone agrees 2021 is going to be a strong year because we'll be recuperating from everything we've lost in 2020. So for those who are a bit more adventurous, it's starting to be attractive entry points. As I said, a little early still, but you can start to find these opportunities. You can try to dip your toes back into markets either with lower volatility strategies or with very long-term, more defensive strategies. And of course, your fixed income markets are holding up better. So instead of trying to really put a number on all of these estimates, we're looking at what the cases are looking like, how much time it's probably going to take to contain this outbreak, and then we can slowly try to position for the future. But it's still a bit early for that.
All right, let's talk about the U.S. macro picture. We have a Fed that's just recently put out data about how big the balance sheet has become. It is now approaching just around $6 trillion. The Fed is pumping as much liquidity as they can, and they can even do more. We've thrown a $2 trillion stimulus effort at this virus and the economic impacts. Is everything being done right now, and is there any more that can be done either on a monetary or fiscal side to make it even more impactful for people and the economy and the markets?
So I think on the monetary side, the Fed is really doing everything they can. And anytime they're seeing a new area that could need support, they're adding a new facility, they're easing some rules, they're creating swap lines with other central banks to ease liquidity strains on the US dollar. The Fed has really been very proactive and very aggressive, and they're doing everything they can.